This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here to welcome back Henry Yoshida of Rocket Dollar. Henry, thank you for joining us again.
Oh, thank you very much, Hall. Great to be on.
Great. So it's been a while since we last spoke. Can you give us a short update about yourself and what you've been doing since our last interview?
Yeah, I'm still on the entrepreneur side of the table. So I think we've advanced further. I can't remember exactly when it was the last time that we talked, but just kind of progressing in the business and spending most of my time on the entrepreneur operator side. Haven't made too many new investments, but just kind of keeping an eye on certain ones that I'd already been in prior to starting the company I'm doing now.
Well, great. Well, let's talk a little bit about your investing experiences. Investors always love to learn from other investors about what works and what doesn't. Is there a particular company you regret not investing in, and why didn't you invest in it at that time?
Yeah, there's a couple in the early stage startup space. So I had the opportunity it's a local company here in Austin, Texas, where we are. So I had the opportunity to be in the friends and family seed round for a company called the Guild Lodging. And of course, I think as we're sort of talking right now, maybe about 2.5 weeks ago, they had announced a $25 million Series B round. This has all happened in the last year, because when I had that opportunity, it wasn't long before I was on the show last. So of course, regret that just from the growth standpoint. Then another one in New York City in the retirement fintech space called Bestwell. I had a chance to be in that early. And the reason why I didn't do it is just at the time, I just basically declined to make an investment for no other reason than that.
Okay. Well, it's true you can't invest in everything that comes by, but sometimes it doesn't fit the thesis or what have you. And it's always interesting to see what drives our decision process there. But what sectors are you passionate about and why? What are you looking at these days?
Well, I always stick close to what I was professionally trained to know about, which is in the financial services, retirement space. So I just think that there's still a lot of opportunities for people to build great companies there's two ways. They could either build new products in these financial services and retirement space. Another way is actually just building technology-enabled workflows to make it more efficient, maybe make these products more accessible to a larger group of people at a lower cost. So I'm always passionate about fintech, and I like it for the purposes of maybe creating new and innovative products, or from enabling the existing workflows and products that are out there to become more accessible and available to people at either lower price points or just lower cost overall. So that's one of the things I really love to concentrate on.
Great. And are there any particular sectors that you avoid investing in? And if so, why?
Well, I mentioned, let's say, Guild earlier. So it might have been probably just things I don't understand. So in that case, it would have been in hospitality and real estate particularly. But for me, maybe I avoid them just for lack of understanding. But sometimes I probably need to think that in early stage investing, it might just be as much about betting on the execution abilities of a team. And in that case, I was close and friends with the founder and probably didn't weight that as much compared to my lack of knowledge in the overall space. So I don't know that I necessarily avoid certain sectors, but maybe for me, it's just lack of understanding of a lot of things that prevents me from going into a lot of sectors.
And that's probably a good idea. Invest in what you know. But let's talk about your worst and best experience with the startup. Let's start with the worst case. What was your worst experience you ever had?
It's the day-to-day in a startup is just always hard. You're always kind of driven from the perspective of needing to keep the company going up and to the right. But in a startup, it's interesting that you always also probably know the exact time frame where you're not going to have the cash flow to continue sustaining the business, at which point you're always on this sort of having to think about the survivability of the business while also executing and making a great product or a great service and getting your team together and building a great business together. So I think it's just the balance that's hard in a startup, that you have to come to work and you have to execute every day, but there's always a limited lifeline for every startup by definition until it's no longer a startup, I guess you could say.
If you had to talk about your best startup experience, what would you put at the top of the list?
Well, I like the best startup experiences. I love the idea of being able to build an innovative product, like making a difference. I get a lot of satisfaction out of that. I mean, I like to think that what entrepreneurs do, and in my case, I focus on fintech, is that my team and I go to work every day and we build a product that a much larger company in the same space with multiples more resources wouldn't be able to come up with and execute on, especially in our time frame, but probably never. And I get a lot of satisfaction out of thinking that the best thing about startups is that this is where great products, great ideas, and sort of great execution come together in an environment that's not hindered inside of some giant bureaucratic corporate umbrella.
Do you see a difference between startups that you're actively involved with and those that you're passively involved with? Do you see a remarkable difference in the returns you get out of it, and financial returns in particular is what I'm looking for? Or do you think that that's orthogonal to it? It doesn't really matter.
It doesn't matter. I mean, as a function of the amount that you put in, obviously the actual dollar amounts that you would get in your own startup are higher just because you're going to have a much larger stake. So if you proportionalize that to the amount of investment and what that would represent of the overall company, I don't know that it's that different. So it's not that different to me, but it's all taking chances because you don't know if you're going to make it. Even some of the best entrepreneurs we know about, Elon Musk and the Jeff Bezoses, actually would tell you that they have more failures in companies than they have as successes. It's just the successes we know about are such outlier positive successes that people never really get to talk to them about maybe some of the failures they had at some point in their life and career.
Good point. Well, so you see a lot of startups out there, and what do you think is the major challenge they face in launching today? Is it the regulatory? Is it technical? Is it market? Or is there some other factor that you see most of the startups in general are facing?
Yeah, maybe I'll caveat that with kind of talking about a specific stage. I talk to a lot of entrepreneurs just like you do, and they could be at various phases. But let's say that you're sort of very early idea stage. You're seed funded, maybe even not seed funded at this point, but pre-Series A. I think the number one thing that hurts startups is just a lack of really singular focus. In other words, they have a big idea and they're trying to do 4 or 5 different things. And really, I think that all great startups are just become very good at one very specific thing and then expand from there. So in the early phases, it's really easy to get distracted and try to do too many things at once. Whereas you should just probably focus on that one thing that could make your business work or be viable at this early stage. No one's expecting you to have a 25 product services platform on day one, but they probably expect you to have identified a niche or a product or market opportunity and to be really, really good at solving a problem in that very specific space.
Great.
So I would say focus.
Focus. That's a good point. And like I said, you see a lot of applications out there in different sectors and so forth. If you had to pick 1 or 2 that you think are really good immediate opportunities to pursue right now, what would you call out?
Let's see, if I were thinking about my space, I look at mine actually, I look at the customers that people might want and then try to match that up to a product that can be built to service that customer and or acquire that customer. So in my current company, what we identified as a certain customer segment, let's say right at 40 years old, maybe $500,000 in investable assets. And what product can we create to go capture a lot of people that fit that demographic? Because that's probably the same demographic that the incumbents in our industry want. So I look at sort of identifying maybe who it is that people want as customers, and then using that and matching it up against a potential product arbitrage opportunity. So that's how I come about with ideas.
Well, great. So it seems like there's a lot of them out there these days as well. Everything's a market, it seems. And what's your take on creating markets and doing matchmaking on the markets itself? Do you believe in one-sided and two-sided markets, or do you think there has to be more to it than that?
Probably, there has to be more to it than that, because you have to give people a reason for you to be in a two-sided market, for you to be the hub that's making the connection in the first place. Myself, I've never really participated in that true sort of marketplace business. I wouldn't say that I'm an expert. I follow probably a lot of people and have friends that would be much more knowledgeable in the space, but I would probably chalk it up to that there's a lot more to it. And you have to give people that real sort of value prop for why you should be the middle person for this connection hub. Otherwise, they'd be able to find each other without need for you or your services.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
For me, I guess I would say that just concentrating, I'm a fintech person. Maybe you step back sometimes and instead of looking at companies very specific to their products, maybe it's worthwhile to step back and look at that macroeconomic opportunity too. And I kind of look at it where I talked earlier about we want to design a product that would be appealing to, let's say, 40-year-olds with a certain amount of money, but maybe that should be overlaid with just high-level demographics in the US, right? Maybe people are waiting later to get into a home, have children, and so forth. Or now someone in their 40s is probably starting to get to the point where they're taking care of aging parents. and maybe trying to keep an eye on even stepping a little bit further back, see the forest for the trees as well in your product development and your business ideas.
Well, that's a good point. So how best for listeners to get back in touch with you?
Yeah, so I think I am the only Henry Yoshida on LinkedIn. My Twitter handle is @Henry Yoshida, so HenryYoshida. I get a lot of people that kind of write me, and I try to do well with engaging and being responsive to folks. I got a couple of calls today for people that want to chat about entrepreneurship. So those are probably the best ways to find me.
Well, we'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, thank you very much, all. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.